Perfect. Yeah. Hi, everyone. I'm Lauren, a partner at the firm. I've been at Pantera for 5 years and primarily have been investing into infrastructure in the space. So that includes developer tools, investor tools, and decentralized protocols. And my background's in engineering and finance as well. Yeah, I have a presentation prepared, so I'm happy to share my screen if that works with everybody.
Yep.
Great. Perfect. Okay. So today I'm going to be presenting a little bit on an introduction to crypto. I'm Lauren. I guess it's going ahead without me. Hold on. Okay, so I'm Lauren, again, a partner at the firm, and basically have been at the firm for 5 years. And for those who are not familiar, we were founded in 2003 by Dan Moorhead, who is the ex-CFO and head of global macro trading at Tiger. We've been investing in crypto since 2013, making us one of the earliest institutional funds investing into this space. And we currently manage almost 4 billion in AUM. So why is crypto interesting today, even in the bear market? Historically, we've seen huge shifts in what's considered important and monetizable when it comes to the internet. And when the internet was first created, it was important to just get information uploaded so that the internet users could see it. And when it came to Web 2.0, we saw increased access to posting content and sharing information from the everyday user. And our data was what became valuable to companies who used it for advertising purposes. And so now with Web3, we're able to send value trustlessly from one person to another outside of the financial system. There's no middleman in between. It's just me sending value directly to you. And when it comes to building the crypto ecosystem, we're seeing a lot of the same narratives play out, the same narratives that we saw in the early innings of the internet. For example, in the 90s and early 2000s, we saw proliferation of tooling that made it easier for people to build websites and applications. And we've seen the same basically in Web3, where it started out really difficult to build in this space, but over time, tools have made it easier to get a decentralized application off of the ground. So just like in the 90s and 2000s, we saw bubbles, speculation, and continued VC investments. So engineers are used to using APIs of different companies and tools that enable them to not have to build everything from scratch. And so we're now at a point in development where development is easier than ever in this space across different protocols. So whatever you want to build, a lot of the tools are there to support you today in crypto. This space, just like every other sector, builds on itself, and we're still very much early, I would say. But I think attention in the space has definitely been growing. You can see from this chart, engineers have been entering this space at an exponential rate. The number of engineers is up 141% from the last bull cycle in 2019, even today in the bear market. And then we've also seen, of course, a number of headlines where traditional institutions are entering this space and trying to get exposure and make sure that they don't miss out. So we've seen, Jane Street, Citi, BlackRock, JPM, you name it, coming into the space. And we also believe that having some exposure to crypto can be beneficial to a differentiated portfolio. And this slide shows some hypothetical returns by having some exposure to crypto. It's also important to note that we've made some of our best returns by investing throughout the bear market, kind of linking it back to the end of the conversation from the last presenter. Like we view it as a very good time to invest. And so now I'll talk a little bit about some categories that have been interesting to us. So starting off with DeFi, decentralized finance enables global access to financial products. DeFi users can interact with smart contracts, which are automated ways to send money if a condition is met. You can send value basically outside of the financial system. And so some of our notable investments in this space include decentralized exchanges like 1inch and Vault and exchanges like Vega. And then we also invest into consumer applications, which is kind of newer over the past couple of years. We've been doing that a little bit more. So basically, those are applications that are used by mainstream users and not just traders. So one example of that would be Audius, a decentralized music streaming application that ensures artists receive a majority cut of the value that they're creating. Unlike with Spotify, they earn, cents on the dollar, and most of the money goes to agents and other companies. And then we also invest into the picks and shovels of this space, which can be primarily thought of as developer tools or investor tools. So basically ways for investors to be onboarded and interact with crypto, as well as companies that are making building in this space a little bit easier. We've invested into well-known custodians like BitGo and exchanges like Bitso, which is essentially the Coinbase of LATAM. And we've invested in really well-known developer tools like Alchemy, which is basically like the AWS of crypto. And then finally, we also invest into decentralized infrastructure, which are platforms that get built on like Ethereum. So you see a lot of applications being built on top of these, call them layer 1 protocols. So that's essentially it. I'm happy to answer any questions about crypto. I know there was an initial comment about regulation and how we view that, but happy to answer specific questions as well.
You had a question about, or you had made a statement about Ethereum. Are you using any protocols besides Ethereum for development purposes?
Primarily, we are mostly invested into Ethereum and any sort of like compatible protocol. So like a layer 2 that's built on top to make Ethereum go faster.
I'm just taking some notes. Yeah, I mean, if you want to talk about the regulatory environment, I mean, we had Tim Draper on 2 weeks ago, and he's bullish on decentralization, but maybe not as bullish on DeFi, et cetera. But if you want to, just talk about it and see and tell us where things are, that'd be great. And also, this is an infrastructure venture capital fund that you're raising, and what is it? A seed fund? Is it a Series A, Series B? Can you talk about that?
Yeah, of course. Okay, I'll talk about that first, and then I'll talk about our views on regulation. But yeah, we are, I would say we're not currently raising at the moment, but we're gearing up, just kind of doing a little bit of educational marketing on the fund that we have today. So we've got a multi-strategy fund. It's 1/3 early stage venture, so that's Series Seed and A. And then we've also got 1/3 of that, the sleeve is for early stage tokens. So any tokens that are pre-launched, like they're still being built. So typically Seed and Series A as well. And then we've also got 1/3 of the fund reserved for liquid strategies. So we have some traders on the team as well. And our next fund will be, I believe, along the same lines of this multi-strategy package.
Can you give us an idea of your performance, how much you've done historically, and with the significant decline that we've seen, how much of a pullback you've had?
Yeah, it's a great question. For our previous fund, I would say I believe it was at peak, maybe 7x. I'd have to like double check these numbers, so don't hold me to them, but I believe we had marked it at 7x or so. And then I think are currently at 4x, but we have one protocol that's launching that I think is gonna be a fund returner. So we haven't yet, I think, taken that into account.
What's your
So even that, I would say that that was like a prime example of investing throughout the bear market. So that fund was primarily invested in 2018 and 2019. And we've seen a huge increase in prices since then, even in this market.
what series are you investing in? Is it seed, series A, series B? And what is your
Series A?
and what's your attitude towards distressed venture right now? I mean, it seems like, there's a lot of mark to market that's happening. Can you talk a little bit about that, in terms of, Silicon Valley Bank? I don't know if your companies that you invested in held their money at Silicon Valley Bank, or maybe they used a wallet. I don't know. Maybe talk about it.
Yeah, I would say, let's see, distressed venture capital. I think, look, it's not just affecting crypto, right? Like, I think venture capital is maybe outside of AI down across the board. And we've seen that in the secondaries markets, like outside of crypto. I will say now is definitely the time that we've been advising our portfolio companies to cut burn and like extend their runway as far as possible. And so they can last until the next bull market. I think generally the alternative asset space, including crypto, is heavily affected by rates. So, I think we'll see what happens there, but definitely will change the dynamics of the market whenever there's a drastic change there. And then, I would say there also are a number of companies we expect to not make it throughout the bear market. Maybe some in our portfolio, but also some outside of our portfolio. And I think that's just like the natural life cycle of venture capital.
So any thoughts on like the NFT market? We got a guy yesterday who had actually come to our dinner party, and a family office who was next to him had invested in his metaverse company, and they're actually making money. They have revenue, and it looks pretty good. Can you talk about, I don't know if you guys are involved in any Web3 metaverse stuff, but maybe you can talk about that and what you see that market reviving. Same thing with NFTs.
Yeah, that's a great question. I would say we have seen a little bit of an uptick. Like, of course, it was down at the start of this year, but we've seen a little bit of an uptick. We've seen large corporations come into this space. Amazon, most notably, just launched their NFT marketplace yesterday. That was in the news. And I think Nike also released an NFT collaboration as well. So I would say like a bulk of the NFT space maybe has yet to find product market fit. So I don't expect to see the entire space do well, but I think there has been an increased amount of interest in the space over the past like couple weeks even. Yeah.
Any thoughts on exchanges? I mean, so we had another guy who has a well-funded exchange broker dealer in Connecticut. And so, what he says is that traditionally the issue, like everything else that is issued, that's financial in nature, the problem is that if you don't have market makers, a lot of these tokens, NFTs, they die because there's no market maker for secondary offerings for trade, right? Any thoughts on that, or the structure, ways to pull more people into being those market makers? Your thoughts?
Yeah. Sorry, I just want to answer one question. One part of your question I didn't answer before. The last question was, do we have any exposure in our portfolio? And I will say, like, we've primarily focused again on the picks and shovels in this space. So we invested in Pinata, which is basically decentralized media storage for the space that's used by a lot of the big marketplaces like OpenSea, Magic Eden. They were used by GameStop as well, or are currently used by GameStop, and is like one of the go-to places when you're building a marketplace or NFT project. And then in terms of market makers, I can't necessarily speak to market makers for NFTs specifically, but crypto does have a number of pretty well-known, I mean, at least in the crypto space, well-known market makers that help protocols through the process of launching their token, and helps, we interact with them all the time. One of them is actually in our portfolio. It's called Wintermute. So very strong, like ex-traditional finance team.
Fantastic. Any other questions from the audience here? You know, your thoughts on crypto and infrastructure. I mean, I know that there was a big move towards infrastructure, you know, back in 2017, 2018. I think a lot of people really were like saying, hey, we got to get more focused on picks and shovels and, you know, worry less about issuing a new type of Bitcoin, et cetera. You know, so we have a question from the audience.
Could you ask her, Marty, or
you can just speak up
if she can hear me? Okay.
There's a
Hi, Lauren. Thanks. It's Rob coloring here. A chart you showed on software engineers or engineers going into it. Do you have any metrics as to? I would imagine most of them are joining companies, but do you have any metrics as to those that are still forming companies and you know, founders versus staff?
I actually do. Let me pull that up. I had just put a presentation together on this, just so I can have the stats in front of me. But I guess from the data that I had analyzed previously, I don't know if I can find it immediately, but we've seen a number of companies be created last year, and then we saw that kind of drop off significantly after like the FTX scandal, and you know, people were basically waiting to see where the dominoes fell. But starting, I would say around February, we saw a pretty major uptick in people leaving companies to found new companies.
anything else, guys? I think that's a really interesting time, and as everybody knows about Silicon Valley, it always tends to bounce back when there's a downturn with new innovation. So you guys have done a fantastic job over the years. I've known, as I said, Dan came to us in 2014, and we've had a lot of investors in the group. So and I think that and I don't know if you guys have any. You have a question? Yeah, one second. And if you have any statistics on adaptation rate outside the United States, but I think that there's a lot of guys outside the United States who really have an interest in crypto, so in blockchain. Last question.
Yeah, I may have missed it, but do you have a view on the central bank digital currency landscape?
CBDCs?
Yeah.
Lauren?
Yeah, I mean, I would say optimistic, but it's not necessarily like in scope for like, anything that we invest into. Like maybe we would invest into infrastructure for, central bank backed currencies. But yeah, I would say don't have a strong view. I think it's definitely interesting. It's a little bit scary from a privacy perspective, but overall, I'm in support of anything that makes financial transactions a little bit easier for everybody.
Fantastic.